I know the families all across America are hurting because of inflation. I understand what it feels like. I come from a family where when the price of gas or food went up, we felt it. It was a discussion at the kitchen table. I want every American to know that I'm taking inflation very seriously, and it's my top domestic priority.
I think what you want to take into account here is the fact that markets are pricing in all the extreme negative news right now, and there could be a lot of positive upsides here. There is a lot of thought that we can see inflation starting to peak. It could start to come down here later this year. We could see maybe the Fed is a little less more dovish than people are expecting. None of those positive surprises are in the markets right now. And I think what you want to take into account is that can actually surprise the markets a lot more than some of the negative news. Getting more of the negative is already priced in, but anything positive, I think we can start to see things come down.
I was in the cautiously optimistic camp until last week when the Fed came out with their dovish rate hike. What that led me to believe is that the Fed is falling further behind the curve and that they're going to have more work to do. Additionally, when we look at our 3 tactical rules that we follow, it's, don't fight the Fed, don't fight the trend, and beware of the crowded extremes. Well, 2 of those rules have now turned against us. We're obviously fighting the Fed right now, and the trend on the S&P 500, the 200-day moving average, has been decelerating and now is about to turn negative.
The best thing President Biden can do is build a time machine and go back to March of 2021 and not pass the American Rescue Plan. The American Rescue Plan contributed about 3 percentage points to the 7% inflation that we had in 2021. It's continuing to fuel inflation in 2022. Of course, the president can't invent a time machine any more than he can convert the United States to using purely renewable sources of energy. Do no harm, I think, is really the best thing the president can do. It's a good thing that Build Back Better hasn't passed. Build Back Better would have increased the deficit by around $400 billion this year and next year. That would have added to inflationary pressures. I think now is not the time for big new social programs that'll boost demand and boost prices.
We were in a pandemic. We are still suffering the results of having massive interruptions to our supply chain. These are things that impacted the inflationary pressures. And of course, Ukraine and Russia and oil have impacted inflationary pressures. But a student loan forgiveness, even at a level of $10,000 that the president has proposed, is going to have a very marginal impact on inflation. So the president has a few tools. He's going to outline those today: reducing the deficit, making sure that we're lowering prescription drug prices for consumers, releasing the strategic oil reserves. These are all things that can be done in the short term to reduce the inflationary pressure for consumers.